Welcome to our channel. Today, we're diving into 10 unique ways to use the stock market and Bitcoin to create financial freedom. This is about building long-term, sustainable wealth using proven strategies in both the stock market and cryptocurrency. We'll cover everything from diversifying your portfolio to exploring high-growth investments like growth stocks and initial coin offerings. The goal is to equip you with the knowledge to make informed decisions about your financial future. Remember, the path to financial freedom looks different for everyone. Let's get started. Imagine this. You're at the grocery store, browsing through the aisles, looking for the best deals. Suddenly, you notice they're having a massive sale on eggs. The price is too good to pass up. You're tempted to put all your money into buying those eggs, thinking you'll save a lot in the long run. Right? But what happens if you trip and fall on the way home? All your eggs, gone. All your savings, wasted. That's what it's like putting all your money into just one stock or cryptocurrency. It might seem like a great idea at first, but if that one investment goes south, you're in big trouble. Your financial stability could be at risk. Diversification is like having a bunch of different baskets for your eggs. It spreads the risk. You might invest some money in stocks, some in bonds, some in real estate, and other assets. And yes, even some in Bitcoin or other cryptocurrencies. Each type of investment has its own risk and reward. This way, if one area of the market isn't doing so hot, you're not completely wiped out. Your other investments can help balance things out. Diversification is key to managing risk and protecting your hard-earned money. It ensures that you have a safety net. So, remember, don't put all your eggs in one basket. Spread your investments wisely and secure your financial future. Ever feel like you're trying to time the market, waiting for the perfect moment to buy low and sell high? It's stressful. Even the pros don't get it right all the time. That's where dollar-cost averaging comes in. Instead of trying to time the market, you invest a fixed amount of money at regular intervals, no matter what the market is doing. This means that when prices are down, you're buying more shares or fractions of shares. Dollar-cost averaging takes the emotion out of investing and lets you build wealth slowly and steadily over time. Some companies pay their shareholders a portion of their profits in the form of dividends. It's like getting a bonus just for being an owner. The beauty of dividends is that they provide a steady stream of passive income. Not all companies pay dividends, and the amount you receive can vary. But over the long term, those dividend payments can really add up and help you build serious wealth. If you're looking for a way to generate passive income and potentially grow your wealth over time, dividend investing is worth exploring. Growth stocks are like the cool kids in high school. Everyone wants a piece of them. These are companies that are growing at a much faster rate than the overall market. Think tech startups, innovative companies disrupting industries, or businesses expanding into new markets. Investing in growth stocks is all about potential. These companies often reinvest their profits back into their business to fuel further growth, so they might not pay dividends right away. But if their bets pay off, the returns can be astronomical. If you're comfortable with a bit of risk and have a long-term investment horizon, growth stocks could be a valuable addition to your portfolio. Let's face it, researching individual stocks can feel like a full-time job. Index funds are like the easy button for investing. They allow you to invest in a basket of stocks that track a specific market index, like the S&P 500 or the NASDAQ 100. One of the biggest advantages of index funds is diversification. By investing in hundreds or even thousands of stocks through a single fund, you're spreading your risk across the entire market. If you're looking for a simple, diversified, and cost-effective way to invest in the stock market, index funds are a fantastic option. Remember how we talked about dividend stocks paying you just for holding them? Well, staking crypto is kind of like that, but in the world of cryptocurrency. Certain cryptocurrencies, like Ethereum, allow you to stake your coins to help validate transactions and secure the network. In return for staking your crypto, you earn rewards. It's like earning interest on your crypto holdings. Staking can be a great way to earn passive income from your crypto investments, but it's important to do your research. The rewards you earn can vary depending on the cryptocurrency and the staking platform you use. Swing trading is like surfing. You're trying to catch the waves of market momentum and ride them for a profit. Just like a surfer needs to understand the ocean's currents and waves, a swing trader needs to understand the market's movements and trends. Swing traders aim to buy low and sell high, but they do it over a shorter time frame, often capitalizing on short-term price fluctuations. Typically, they hold their trades for a few days to a few weeks, unlike long-term investors who might hold for years. This strategy involves analyzing charts, identifying trends, and using technical indicators to try to predict where the market is headed next. Tools like moving averages, relative strength index, and MACD are often employed. Swing trading is definitely not for the faint of heart. The market can be unpredictable, and emotions can run high. It requires a good understanding of technical analysis, risk management, and a willingness to commit time to monitoring your trades. Constant vigilance is key to making timely decisions. But for those who enjoy the thrill of the market, the excitement of making quick decisions, and are willing to put in the work, the rewards can be substantial. Swing trading can be a potentially lucrative strategy, offering the chance to profit from the market's natural ebb and flow. Long-term holding takes the concept of dollar-cost averaging even further. Instead of trying to predict short-term market fluctuations, long-term investors focus on the big picture. They believe that over the long term, the stock market tends to go up, even with all its ups and downs along the way. They look for quality companies with strong fundamentals and hold on to those investments for years, if not decades. This approach is all about patience and discipline. The goal of long-term investing is to build wealth slowly and steadily over time, not to get rich quick. ICOs are like the Wild West of crypto investing, exciting, potentially lucrative, but also risky. An ICO is essentially a way for new cryptocurrency projects to raise funds by selling tokens to early investors. Think of it like crowdfunding for crypto startups. Investing in an ICO can be like getting in on the ground floor of the next big thing. But it's important to remember that not all ICOs are created equal. Some projects turn out to be scams, while others fail to gain traction. Before investing in an ICO, it's crucial to do your due diligence. If you're thinking about venturing into the world of ICOs, remember to proceed with caution and never invest more than you can afford to lose. Ever thought about investing in real estate but weren't too keen on the idea of being a landlord? The thought of dealing with tenants, maintenance issues, and the constant worry about property values can be quite daunting. Well, REITs, or real estate investment trusts, might just be the answer to your concerns. They allow you to invest in income-producing real estate without actually having to buy, manage, or finance properties yourself. This means you can enjoy the benefits of real estate investment without the headaches that come with property management. Think of REITs like a basket of real estate properties, office buildings, shopping malls, apartments, you name it. These properties are managed by professionals, so you don't have to worry about the day-to-day operations. You can invest in REITs just like you would invest in stocks, through a brokerage account. It's as simple as logging into your brokerage app and purchasing shares. One of the biggest perks of REITs is that they often provide dividends, which can be a nice source of passive income. These dividends are typically paid out regularly, giving you a steady stream of income. If you're looking for a way to add real estate exposure to your investment mix without the hassle of traditional real estate ownership, REITs are definitely worth considering. They offer a convenient and efficient way to diversify your portfolio and potentially increase your returns. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell so you never miss an update. Let us know in the comments which strategy you're most excited to try. Building financial freedom is a journey, not a sprint. It's about making informed decisions, staying consistent with your investments, and tuning out the noise of the market. See you next time.